Good afternoon. This is Ken at Tortoise Capital with a review of the weekend trading reports for July 20th, 2019. Market remains in bullish normal conditions. It's overbought on an annual basis with a score of 94 out of 100 on the 260 NDX. And the 10 NDX, we are at the southern edge of neutral at 30 out of 100. In the market mosaic, price with respect to the 200-day moving average is about 5% above the boundary for sideways at 6.91%. The risk index is the 30-period moving average of the VIX divided by the 10. That reading is at 1.076, so we are still in risk on. The score of the risk index is computed to the risk Z by looking back 5,000 trading days and finding the standard deviation and computing the Z score at 0.74. You can see that we've cooled off to back inside the 1.0 band on the 90-day histogram. Next, reevaluation of blended monthly rebalancing on or about 1 August. You can see the current holdings this month and then the leaders based on this performances so far this month as of close of price on Friday for the various portfolios that we monitor. ETF2, the theoretical exposure is at 80%. Quick look at some BMR portfolios. Only Russell Small Cap is on a cash signal in the ETF 13. It's been underperforming consistently. The U.S. indexes like Treasuries, Tech, and the S&P are at the top. Good week this week from the defensive plays in Treasuries and Australia. ETF 32, again, about a quarter of the symbols are on cash positions, including energy, China, commodities, Russell, and Euro 350. Good performance this week turned in by China, gold, Brazil, and treasuries. Suffering this week were the Qs and consumer discretionary, I think, given back some gains after the outperformance that they've experienced. Dow 30, weakness in United Health and Disney, along with Nike and Johnson & Johnson this week. Outperformance, especially in IBM, which really powered through a disappointing earnings report, as well as Goldman Sachs and Boeing. Three clear leaders in the clubhouse: Microsoft, Visa, and American Express. In the sector spiders, strength in transports, banks, and metals and mining, especially had good week, as those of you who are keeping score along with us during the live trading workshop would notice. Especially of interest is U.S. steel, which has moved into a long-term symbol of interest for us. ETF Max, really good performance in the gold and precious metals sector, which also leads us to wheat and precious metals as a leveraged way to play that. New Zealand has had a really nice performance all the way through. That may be of interest. ENZL. ETF2 regional report. Two of the symbols are on cash positions. That's Russell and the European 350. That puts us at 80-20 in the theoretical asset allocation model, down from 90 and 10. The U.S. at 52 is still better than the globals at 43. Inside the U.S., it's tech, large caps, mid caps, then small. Two strongest sectors, tech and large caps in the U.S., and then the two weakest emerging markets and Europe. You can see the world market model favoring, I think, the asset classes, but the sectors, technology and consumer staples, really leading the way. Brazil really gets my attention right now. ETF top 30 out of the database. based on strength ratings and sufficient liquidity for trading purposes. You can see green and green up there in gold, and then then Brazil is now moved into the top at green and white. So green and white means it's a current leader. It was good, meaning the white was good, and now great because it's in the green under strength, and so we want to exploit that new strength, and it's well suited for turbo trading. It's a new leader. Whereas something like Vanguard Growth or the home builders are white and green, you can see that was great, now it's just good, so you want to be preserving profits, watching for resumption. It's easy to believe in this if it starts to outperform again, but the current bloom is off the rose, if we can say it that way. ETF liquidity, combining average daily dollar volume and then a measure of the intraday volatility. So those in green are exceptionally well suited towards intraday trading and turbo. So Brazil at 1.81% is much more, almost 2.5 times as volatile as the S&P, and still very liquid. Shifting to the daily, some more weakness on Friday. Could not build on the strength from Thursday, but it held key support at 296.8. So that's 297 essentially. Near the top of its 30-day trading range, in the lower third of its 10-day, so there's some room for it to gain. Dragon's still sloping up, but now just started to roll over, so that run is done. So there was one leg, two legs up, now support at 297 and then 295 at the PSAR, the 10-day low, and the 90 and the Bollinger Band. So that little range of support is crucial. Slope of the RL270 is still up, and volatility declining, as you notice by the collapsing lines of the Bollinger Bands. We're well into the fall, in the middle of fall here in the Red River in MACD histogram. No signals in overreaction and channel. You can see the 10-day max pain candidates, the usual suspects. Daily tactical summary for the Dow. AXP was exceptionally bad. Caterpillar, United Tech, and Boeing were all very good on Friday. Just a couple dojis and three symbols testing out better than 2-to-1 on the auto framer: Johnson & Johnson, ExxonMobil, and Walgreens. Johnson & Johnson has the added advantage of being an RSI2 single digits, and then notice it had a breakdown of the 10-day and the 1-month trading range, as did Travelers for the 10-day. Big breakout in Boeing over the 10-day range, has micro improvements in Intel. In the Dow, or the ETF 30 I should say, 5 test out better than 2-to-1 on the auto framer, only 1 doji, the industrials. Half a dozen frog quality numbers better than 3, 3 symbols in the single digits for RSI2, including Mexico, so that's really on my short list for excellence here for short-term trading. Had an RSI2 value of 5. That's 2.8-to-1 on the swing auto framer. Was not horrible on Friday, and yet has been really bad 10 days all the way out to 12 months, and then had a breakdown out of its trading range on the 10-day and the 1 month. So lots to choose from in there. Real estate also suffered, and that's been such a good defensive play that I got to believe that that's got to be on your short list in case further market weakness is seen. Daily pinch and stretch report. What really stands out for me is the metals and mining, gold and silver. IBM has been doing very well. We tapped into that Thursday and Friday in the chat, in the actually Wednesday, Thursday, and Friday in the live trading workshop. Lots of super pinches to choose from for swing trading. They should be on your short list for framing. Treasuries in the auto framer. In the regression line, fractals. Um, those that are the most numbers of ATRs above their 270 are the ones that may be cooling off. That's Australia and Taiwan, and agriculture, cattle futures there, all almost 8 ATRs above their long-term fair value. Inside the Dow 30, that's IBM, Home Depot, Apple, Verizon, and Walmart, or Visa and Walmart. All are well advanced. So those are relative strength leaders in that sense. Daily squeezes, um, Dow Chemicals, Altria, Morgan Stanley, General Dynamics all test out well. We'll be developing more of the swing report as we go, looking at a much broader set of indexes and symbols that are in the spring, and these are ones that are. We start looking for owls on swing trades, and that makes them interesting candidates for day trading as well. The Four Seasons, nothing in the spring, but now we have three in the winter. That's Mexico Treasuries in Europe. All of them, quality asset classes on sale that are selling off. So we may be able to get more on the short side, but then the rebound at swing turning points should be of interest. Silver is the only other thing that's not in the fall, and that's expanding well in the summer. Everything else has rolled over and is pulling back towards the zero line. So cautiously stalking these for recoveries. And all of the regression line slopes. The 30 has rolled over, the 10 is back at the zero line, even the 90 has started to stall. So this is a market that's really in a critical state. Has been all week, and we've seen some good intraday trades. Now it's time to start seeing swing trades emerge from this market that has pulled back to measured support levels. That's everything from Tortoise Capital. Keep your risk measured and your powder dry.